Hi, Francine.
Hi, Dave.
So, look, I know everyone's talking about it's the Northern Ireland Protocol Brexit. I actually want to talk about football.
Do you? I mean, I think everybody wants to talk about football. I know there's a Windsor framework. That was the news of the week. But actually, it's all about United, isn't it?
Yeah.
And
Windsor,
who else
whatever.
is for sale?
Manchester United. And, it is, we're around a year, I think, since the Chelsea bidding war kicked off last year. And now we're all talking about Manchester United, but the world obviously feels like a very different place, and the circumstances around that bid feel very different as well. We've seen the share price of Man U tank in the last few days as people have thought maybe this whole process is getting too frothy. The valuations are really getting out of control.
United really is one of the most exciting bidding wars, I think, for one of the biggest names in sport. And we're trying to figure out whether this is about the money or whether it's, a trophy asset that people want to own, even if it's loss-making in the future.
Yeah, I'm just reading a great story on Bloomberg from the David Rubenstein show with the Qatari sheikh, whose son has made the £5 billion offer for Manchester United. He says he's not a football fan and doesn't think it's a very good idea, and in fact didn't want Qatar to host the World Cup.
Imagine the family dinners talking about football. So let's talk about the big money in professional football. With us, another David, not the David Merritt we love, David Hellier, resident football expert.
Hi, David.
The other David we love.
Thanks, though.
Also Chelsea diehard, so maybe I love him more. David, thank you, David Hellier, for joining us. I mean, you've been owning the story. How many bids are there for Man U?
There's the two public bids, the Qataris and the other bid from Jim Ratcliffe. I'm assured that there are others that are floating around. One investor said to me yesterday, we're just waiting to see these two slug it out and then maybe come in, which of course would be against the so-called rules because Rain had asked for bids by its first deadline. But you never know with football bids. They're very unpredictable.
It's very different, isn't it, in feel to the Chelsea frenzy last spring, when there were many more people lining up. Do you think investors think actually the prices of these assets have got out of hand?
I think that's part of it, but then Man United is just such an iconic brand. I mean, I know there's only one of any team, but there really is only one Manchester United in world football.
Why is that, David? Is it the number of fans, the love,
in a way, I think it goes back to the Munich air crash in the 50s. I think the Busby Babes, all that sort of thing, it's built up a massive fan base, massive global appeal. I mean, latterly, when they announced they were putting the club up for sale, they claimed they had 1.1 billion social media users. They've been successful, but it's something else, and I kind of put it down to history, really.
And yet we've only got two firm bids out there. You say there are more waiting in the wings, you think, from all around the world?
It just feels a different process. I can't believe that there isn't an enormous amount of interest for Man United, but just the way that people are declaring themselves feels different. I mean, in the Chelsea bid, it was like lots and lots of different people were kind of getting out there and trumpeting the fact they were bidding. Many of them didn't get anywhere. They didn't get to the final four. But the climate is different. I mean, the climate is definitely different. Interest rates are rising or have risen. There's not the same euphoria that there was before, but doesn't mean there's not the same strength of intent.
Yeah, the market feels the world feels very different, doesn't it, now than it did a year ago? What about all the other clubs, though, that have been touted, rumours about or reports about Liverpool? I mean, do you think the whole of the Premier League now might not go up for sale in the way that it felt like it would a few months ago?
Yeah, I mean, Liverpool are obviously saying that they're looking for a minority investor rather than an outright sale. I've been told there's at least another two clubs looking for minority investors. That seems to be the way that a number of clubs are going at the moment. But still, there's a lot of interest from America, from the Middle East. It's not going to be the end of the story by any means, but it's just a little bit cooler than it was.
I'm David Merritt.
And I'm Francine Lacqua.
And this is In the City, Bloomberg's podcast connecting you to the conversations at the heart of the City of London. This week, we're going to take a look at those betting billions on football.
So, Dave, I spoke with Dan Jones, a sports business advisor and former global lead partner for the sports business group at Deloitte, and Christina Philippou, principal lecturer in accounting, economics and finance at the University of Portsmouth. Well, I actually asked Christina point blank, why is so much money up for grabs when it comes to football?
Football has taken an interesting turn. I mean, it's always been an industry that's of interest to people. But we've obviously seen some really big bids and some really big clubs go on the market and sell for larger than expected amounts recently. So, yeah, interesting times.
So, Dan, is this basically Chelsea? Chelsea had to be sold off. The money was so big around it, and now everybody wants a piece of it.
So I think it's been happening now for a while, but I think that the Chelsea situation sort of accelerated things again because it was a big club that I guess people hadn't been expecting to come onto the market. It hadn't been on the market for a long while since Mr. Abramovich had taken it over. And it triggered, I guess, a very open auction process. It was very public. The club clearly had to be sold. It was known who was involved in bidding for it, and it was pretty public in terms of the amount it went for. And I guess that then awakened the interest of a couple of other Big Six teams to explore their options. So you had, Manchester United, obviously, there's a process going on at the moment. Liverpool, there sort of may or may not be a process going on at the moment. I think the ownership have made pretty clear recently they're not looking to sell the whole thing, but let's see. And this is the biggest sport in the world. It's the biggest league and the biggest sport in the world, and these are the biggest clubs in that biggest league. So if there's going to be activity and huge values going on anywhere, that's where it's going to be.
But Dan, why do we have so much foreign money? And actually, how do you put money into this if we're not going to revive the Super League or something like that?
So in terms of the foreign money, I think you've got a situation where it is the world's global language. Sport is just great at crossing borders, bringing people together, and from a sort of media and content point of view, it's live, it's unscripted drama, it's a point of view. Very few things now that pull an audience together simultaneously. So the whole world is looking. It's the world's favourite sport. The best players from around the world, the best coaches from around the world are now in the Premier League. So the owners and the fans sort of follow on naturally from that, I think. The topic of European Super League, for what it's worth, I am a long-term sceptic on the European Super League, both from a fan's point of view, but actually more fundamentally from a business point of view. And I think it's probably less likely now than it's been for at least 25 years. And I would very much hope it doesn't happen. And I don't think it makes any sense for it to happen.
Yeah, Christine, the fans won't have it. There's no Super League coming, is there?
Yes and no. I agree with Dan in terms of I don't see it happening in the way that it was scripted to happen. But we have definitely seen kind of consolidation with the kind of larger teams across football, particularly in Europe. So, there are arguments that there is some form of Super League happening at the moment, less of the sort of more traditional movement across leagues and within leagues and who wins the top leagues. And I include the obviously Champions League in that. So I'd agree that I can't see the Super League happening in the way that they were expecting it to happen. And I know there's been some movement trying to get the project off the ground again, but I can't see it in that sort of permutation having any traction with the biggest clubs that we're talking about at the moment.
Dan, how much do you think United will go for?
That's a really great question. You look at it and you see the sort of numbers that are being thrown about, and people are sort of, you read anywhere from 4 to 6 billion, I think, being talked about, and then you ask people which currency they're talking about, and people sort of then get a little bit vaguer even about which currency they're talking about. So I think the thing with this is that if you look at a football club valuation on the same way that you would value a normal business, then the valuations become, very small and very uninteresting very quickly. And so, I came out of a background in my career where that's what I used to do full time. I used to value companies full time. That was my job. And when I moved across to working in sport, I sort of had to, sort of detach myself from that bit of my career history and think, well, why do these things go for so much money? Well, they do because there's an active market that they go for this much money. So people talk about valuing football clubs on the base of a multiple of revenue. Why are they valued on a multiple of revenue? Well, because that's how far up the profit and loss account you have to go to get to a consistently positive number across the clubs. Because if you value them on a multiple of profits, you get a very low or negative number, and likewise on a discounted cash flow. So how much will Manchester United go for? It'll go for whatever the number is that comes out of an auction process. So, the highest number one of the bidders is willing to go to, as long as it clears the threshold of what the seller wants. And I know that sounds a really glib answer, but that is the reality. These things are very unique assets, and it's a very peculiar market, but they have huge value because someone's willing to pay a huge amount of money.
So, Christina, this is almost a vanity project, or it's a trophy asset, and there's only one United, there's only, one Chelsea. And so I don't know if we need to talk about the psychology of the owners, but do they own it because they love the club? Or again, is there, can we talk about multiples? Can we talk about EBITDA and things like that?
I think there's different types of ownership, and this is where football gets even more complicated and the valuation process gets even more complicated because different owners come into this for different reasons. So if you're looking at the kind of private equity side, what are they looking at? That's exactly what they're looking at. How can we make money out of this, right? That's the end game. However you dress it up, the end game is let's make money out of this. But then other ownership kind of comes in more the traditional trophy asset idea of, it doesn't matter if we actually make money out of this. Any money we make will kind of go back in. If you look at Chelsea, they were losing, close to $1 million a week. It's not exactly for profit, but it was about the trophies. It was about the glory. So it kind of makes the process even more complicated than the reasons that Dan was talking about.
Dan, we have this great story on the Bloomberg talking about, Chelsea's new US private equity owners and the fact that they're betting on their know-how, how it could make, Chelsea Football Club more valuable than some of its biggest rivals. I mean, for that, they need to win trophies. How long does it take? Do you have to have a flair? I mean, business and football, it's not necessarily the same thing. This is about motivating players. It's about getting a great coach and getting them to work together.
So, look, I think it's really interesting. I think when the Chelsea process concluded and, the headline was, it's an American private equity investor, if you then fast forwarded to say, oh, and this is what they'll do in the next 2 transfer windows, no one would have believed you. That's not American private equity investor type profile behavior. That's more sort of the trophy asset type investor. So, they've been extremely bold in what they've tried to do. Fundamentally, though, with these clubs, people, I think, talk about the money in football and say, it means that the football doesn't matter. It's all about the money. I think that's a fundamental misreading of the situation. The money and the success have to go hand in hand. If you get success, that generates more money, and if you have more money, you've got a better chance of generating success. Chelsea are obviously, the new owners are trying to reboot things very rapidly, and at the moment they're having some teething problems with that. So they need things to work out on the pitch. But again, I think we go back to this sort of value of the club as an asset basis. I don't think they're looking at getting an annual yield out of this investment. I don't think they're looking at it being an annual profit. They're looking at, making it the biggest and most successful club in the biggest and most successful league in the biggest and most successful sport. And if they manage to achieve all of that, it will have huge value. And the money that went into transfer windows or early losses in their investment will be sort of long forgotten about. But it's not. I think it's fair to say what has happened at Chelsea since the takeover is not what most people would have expected from that style of ownership when they first came in.
Yeah, and Christina, I guess American money in European football clubs is not really a new trend. We have AC Milan, Atletico Madrid, you have Crystal Palace, Genoa, all owned or partly owned by private equity investors. But, what separates this one is the sheer size of the gamble.
Yeah, absolutely. And I think it's also kind of indicative of where we are in terms of, how the economy has moved as well in the last few years and the availability of money in certain sectors. And I think you're right in your kind of initial question in terms of, did Chelsea kind of set this off? Well, to a degree, yes, because the capital growth between where it was, what it was valued at when Abramovich came onto the scene and what it was sold for was massive compared to, say, looking at any other investment. You could put your money anywhere else and see how that would have grown. No way would you go from, what was it, around 150 million to the billions that the Chelsea sold for. So it's been a bit of a wake-up call, I think, in terms of, well, maybe this is a high point and maybe we should get out now before potentially regulation and other stuff dampens the prices.
Dan, I want to ask about regulation, but first, how much do we know about Chelsea's transfer strategy? It does seem to, be to spend big for young players, but place them on lower wages than previous stars. So it's almost like it's the way private equity works.
Yeah, I wouldn't pretend to know the ins and outs of Chelsea's transfer strategy. That would be a fairly tightly guarded group of
disappointing, Dan.
a few people with a lot of analysis sitting behind it. And yeah, I mean, again, with wages of players, I mean, that's a really interesting topic because you see numbers reported, but how closely those match what's really in those contracts, who knows? And of course, one of the things you also know about footballers is if you sign a footballer and you put them on an 8-year contract, that may have a wage number in it. If they have a really successful first 2 years with your club, that wage number is going to get renegotiated. That's going to happen. And again, when people talk about sort of professional investors coming into football and from sort of a finance background, a sort of a city type background, this is not unfamiliar territory, right? I mean, if you've worked in those sort of environments, whether it's traders or deal makers, whatever you're paying them, if they turn out to be very, very, very good and very, very successful, you're going to be paying them a lot more pretty quickly, or else they're going to go somewhere else. So that's the nature of the beast.
How do you expect regulation to change? So there are two things here, right? Is that you can't have the same group of people owning multiple clubs, but also governing Europe's clubs are a series of so-called financial fair play rules. So how will those change?
So it's a real peculiarity of the industry. So if you look at UEFA's financial fair play now, for financial sustainability regulations, you look at what is proposed around financial sustainability from the white paper that the UK government put out around English football. This is probably the only industry I can think of whereby the regulations that are being introduced by governing bodies and regulators are aimed at controlling costs and enabling the businesses to be more profitable for their own investors. And so the idea that somehow that is going to stymie investment, that is going to hold things back, is kind of quite hard to get your head around initially. So, these are regulations that are designed to make football clubs more profitable, or at least less loss-making. So prima facie, that should be good news for investors.
Christina?
Yeah, I would agree with that. And, kind of skipping ahead to the white paper regulation, a lot of it is just so basic. It's have some basic controls, have, a forecast for next year or the year after. We're not talking about this kind of groundbreaking regulation of, we're expecting all these massive things to come in. It's just very basic business sense and just making sure that it kind of goes into football. So yes, obviously short-term costs and changes, that's always going to happen when you have new things that you need to kind of report. But on a kind of more long-term footing, I agree. It's all about, being more profitable or being profitable given how many of them are loss-making. It's a very loss-making industry. So it's a way forward long-term.
And Christina, if you look at the current bids for United, so there's the chairman of the Qatari Islamic Bank, the son of the former prime minister of Qatar, whose offer we understand is around the £5 billion range. And then Jim Ratcliffe, Britain's richest man. Again, it seems like a lot of these premier clubs either attract American money or Middle Eastern money. How do they spend it differently?
What you kind of tend to see with a lot of the Middle Eastern money is more of a sort of trophy asset type of idea. So spend money, reinvest it in the club, grow your bases, pump money into the academies, pump money into various aspects of the game. Whereas what we've seen with more of the American investors is more about, how can we eventually get money out of it? Can we get some takeout dividends, which is what's been happening with Man U over the years, and looking at more sort of, it's a very kind of different scenario when you're trying to manage your costs compared to when you're just trying to basically ensure that on pitch is the best that it can be at pretty much just staying within the financial regulations. They've dropped the fair play part of the regulations for a good reason.
Christina, do fans need to love the owners? I mean, very few do. Certainly, some of the current owners, but does it change the way that, the club is perceived, that the players play? Does it actually make it a stronger team?
I think this is the complicated aspect of when you're trying to look at the corporate governance side, when you're trying to look at decision making, when you're trying to look at regulation. The problem is you've got a whole host of different stakeholders with very, very different ideas of what is success and what is good for football. So a lot of fans, and we're all fans here, where do you want to be? You want your team to be doing well. That's kind of the end goal, right? Whereas depending on the ownership, you might want to be making some money out of it, which doesn't necessarily go hand in hand directly with the best on pitch. Although, there's a huge link between successful clubs and those that have a lot of money to spend. So particularly in European competitions.
Dan, do you think the UK government, and when we talked about the Super League at the moment, I think even Boris Johnson, who was Prime Minister at the time, was one of the first ones to react to this. But does the UK government need to take a closer look of where this money's coming from?
So, the regulator, and part of what's been recommended with the independent regulator is that an independent regulator will have strengthened powers over the owners and directors test, which is sometimes sort of colloquially called a fit and proper person test. So it's about sort of checking the credentials of those people who are owners and directors. And it's, I think one of the things the regulator is proposing to introduce is ongoing checks on that. So it's not just about, is this an appropriate person to have involved in owning and running a football club on their way in the door, but do they continue to be of that standard? So, obviously circumstances change, things come out about people commit, missteps and misdeeds, and these things can change. So I think, yes, it's important that there's good governance and good control over that. But again, this is not something I don't think particularly to be fearful of, or something that's going to somehow be terribly damaging to the game and inhibit things. That it just, Christina has said it very well. I think, it's just all very good common sense stuff. It's really hard to object to.
When we were in Davos, actually, in January, there was a Manchester United store, and we also caught up with the Glazers, who said, well, everything's on the table. There are no options that will not be looked at. And we also talked to the chief executive officer of the Qatari Investment Authority, and this is what he had to say on football clubs.
Football, the clubs and the sport is becoming very commercialized. So the business model of these institutions, let's say, are becoming very commercialized and very investment friendly. So you see even funds are becoming investors in this. And you will not be surprised if we invest this.
Dan, how do you make a difference between the current bid from, the former son of the Prime Minister and the Qatari Investment Authority? It can't be the same entity bidding, because then they would be owning 2 Premier League clubs.
Well, they wouldn't necessarily be owning 2 Premier League clubs. They would be owning 2 clubs.
Oh, yeah, because they own PSG.
Yeah, who aspire to compete in the Champions League. And UEFA has a rule book around those things, a rule book that, a lot of those things that the gentleman from the QIA was talking about, I've been doing this for 25 years, and those same sort of things would have been being talked about around the turn of the millennium. There's perhaps another 0 or 2 on the end of the numbers being talked about, but the same principles apply. And the reason why UEFA introduced its rules against multi-club ownership within the same competition was because a company called ENIC was buying up various clubs around Europe, and they ended up in a situation where they had multiple teams playing in the same competition. And ENIC, then ultimately, retrenched into just owning one club, Tottenham Hotspur. So, it is definitely something that UEFA has rules to try and mitigate against and control for. And it's not as simple as just ownership of a club. It's about significant influence over a club as well. So, I'm sure it will be looked at extremely carefully. If there's any sense that a party is coming in to own a club who is closely affiliated with somebody who owns another club, they will look very, very carefully at that. But, it's a case-by-case basis.
Christina, at the same time, so we have the Saudi Investment Authority, the PIF, actually, the Saudi Sovereign Wealth Fund, invested in Newcastle. They're not doing badly.
Yes, that obviously happened recently. And what's been interesting is obviously under the previous ownership, Newcastle were run under quite a tight ship. So they weren't spending that much money. So they had quite a lot of room to play with kind of financially. So with the income of PIF, they've actually been able to spend some of that money and stay within financial regulations because there was that kind of headroom because of how the previous ownership ran it. And, as we've discussed, spending money in the right ways can be very beneficial on the pitch, which you would expect in most businesses, right? Spending money in the right things kind of gets you where you are today. So it'd be interesting to see how that develops going forward.
Dan, talk to us a little bit about the Wall Street banks that are putting these pitches together. So this is like deal-making par excellence. I guess the fees you get from those are extremely high. But then JP Morgan, who's involved in the Super League, also got a huge backlash because they somehow gave it their blessing. Is it profitable for Wall Street to be advising on some of these massive deals and maybe also taking a view on whether something like the Super League should go ahead?
So, I mean, I guess it's interesting. I mean, having worked in the industry for a long time, we talk about, massive deals, and in a sporting context, and to the layperson, the sort of massive football fans, these are massive deals. The numbers that are being talked about are huge. But in a Wall Street context, in a business context, these are relatively small businesses. There's not a single football club in the world that turns over more than £1 billion a year. And you compare that to, the companies that are in a FTSE 100 or top of the NASDAQ or whatever it would be, they are relatively small businesses. So from a Wall Street point of view, does it make sense to be involved in mandates to help people buy or sell these clubs? Yes, it can in and of its own right. The processes that can bring scrutiny with them as well and can create some turbulence for them. So they need to think through carefully what the reputational side of that might be as well. And of course, one of the other things that's very interesting about being involved in these sort of deals is that it's actually the people who you are working with and advising and what their other interests are as well. So, for example, you work with Jim Ratcliffe and Ineos on the Manchester United deal. Well, Ineos do a lot of other quite interesting things. And as you said, he's Britain's wealthiest man. So he's probably quite an interesting person to have as a client more broadly. Likewise, working with a sovereign wealth fund from Saudi Arabia or Qatar. So the deals in and of themselves are, I would say, relatively small fry for Wall Street. But in terms of the profile and the other avenues they can open up, they're pretty interesting. And again, I should imagine for most career investment bankers, the chance to work on a big football club transaction is one of the more interesting things they get to work on.
Great. Thank you both for joining us.
Thanks for listening to this week's In the City. We will be back next week.
But in the meantime, if you like our show, please head on over to Apple Podcasts or wherever you listen to podcasts and rate, review, and subscribe.
This episode was hosted by me, David Merritt.
And me, Francine Lacqua.
It was produced by Summer Sadi.
Additional editing by Blake Maples.
And special thanks to Dan Jones, Christina Philippou, and David Hellier.